Good morning, everybody. Morning, Andy. Good morning, other Andy. Andy Man, Andy V. We got all the Andys today. Good to see you guys. Welcome to the room, everybody. Glad to have you. Whiskey Breath, still my favorite name in the room of all time. Hope everybody's doing well. Hope you guys had an outstanding weekend. We're going to get some work done this week. It's going to be fun, and we're going to keep it. We're going to keep it focused. We're going to keep it simple. And we are going to talk about two different platforms, guys. We're going to talk about NinjaTrader a little bit. We're going to talk about TradingView. I'm going to try and go back and forth. Just live market. What's the read? What's it say? And what does it mean to me in terms of advantages? Before we do that, forexfactory.com/calendar. Just checking news, seeing if there's anything going on. Guys, no high impact news this morning. But I do check every morning for these red boxes, high impact. They can create big jumps and bumps in the market that can mess up your patterns, your good time. If you are a part of the Nexgen funding company, it is not allowed to trade during high impact. And there's a definite reason for that because it can change the direction of the market rapidly. So it's just a stop off, takes a half a second each and every morning to see where I'm at. John, were you able to get your charts back? I see you popped in the room here. Go ahead and get with Jason this morning. If you can't, if you haven't, we'll get you squared away. All right, guys, so we're going to do, it's funny because it's literally the same thing every day. We're going to do what we do each and every day. We're going to look at what we look at, and we're going to talk about advantages. And I'm just going to bring up some. Hey, good afternoon, Miss Jen. When we talk about really either platform, guys, having momentum on your side is the first advantage that I always look at. When I open up a chart, I don't even hesitate. I just say to myself, hey, do I have momentum? And momentum is defined with trigger lines, guys. We've got small triggers and large triggers. You're going to see them on NinjaTrader. You're also going to see both small and large triggers on TradingView, guys. And momentum is defined through that separation between the two. When the smalls are below the large, space between, guys, this is strong trigger lines. You see the same thing on a large chart. And it is tempting to say, hey, we've reached an area, I need to go long. Hey, my smaller, faster chart turned green, I need to go long. But guys, the reality is especially on TradingView, when you have momentum down, down should be your thought process. Good morning, Steve Diego. When you've got everything angled down, guys, this is when the market tends to continue down. So we're going to focus on first recognizing the momentum of the market. What's it say? What direction should I be trading? Momentum is like a freight train that's difficult to stop. Learn it, embrace it, love it. And then we're going to make sure that there's nothing in the way because things in the way can create bounces. How's that for a technical term, guys? On NinjaTrader, any horizontal line on your large chart could stop the market, could create a reversal, could create a bounce that you just can't withstand. Hey, good morning, Chariot. And it could be a divergence high line. Guys, divergence means that there was a loss of momentum. That's all it is. This magenta line that prints off a pivot, it says, hey, the buyers were pushing and the sellers told them no. You're going to see it at lows as well. A divergence low is going to be a cyan line that prints off the bottom of a pivot. The sellers are in control and the buyers told them no more down. We want it to go up. We're taking your momentum. These divergence highs and lows become lines in the sand, guys. And if the buyers try to get through, that's where the sellers are most likely to fight. Absolutely no long trades into those areas. The same is true with the divergence low. You're going to see yellow one-to-ones. And guys, this is both TradingView or NinjaTrader. Yellow one-to-ones are like fibs that print in the moment, guys. So while we don't have support and resistance fibs on TradingView, we absolutely have these yellow one-to-ones, and they can create a bounce, and they can create a retracement, and they can make life very difficult for you if you choose to trade into them. The same is true on NinjaTrader. We trade to these areas. We trade from these areas rather than trading directly into these areas. You're going to see mid bands on both, guys. The mid band, when price is below it, it'll turn magenta. A magenta mid band can be used as resistance if your rules are met. A green mid band means price is above, and you're going to look to that mid band to behave as support when your rules are met. Those are the similarities between TradingView, one-to-ones, trigger lines, mid bands, divergences. The differences are going to come in fibs. Fibonacci areas of support and resistance, guys. Red for resistance, blue for support, and what a great example to start the day. Fibonacci support stopped the market darn near to the tick. The divergence low stopped the market. Fibonacci resistance stopped the market. Yellow one-to-ones stopped the market. Guys, you know about these things long before you ever get to them, and you can choose not to trade into them. You can say to yourself, hey, I know it's going down, but I reached something that could stop the market. I choose not to take that trade, and that's going to define that clear path by not trading into areas. So when you have momentum, you have a freight train of speed behind the market. It's pushing it. This is when the trends are likely to continue. This is when these key areas, these Fibonacci areas, these zones on TradingView, that's what I didn't show you. So since we don't have fibs on TradingView, we do have zones. And guys, look at how that zone of resistance stopped the market. This VWAP created a big bounce. A lot of you saw it. And now we're almost down here to a support zone, which means that if the market touches that zone, guys, we're taking shorts off the table, at least for a minute. We're going to wait for the reaction rather than hope. So momentum and path, this is your core. When you understand momentum and path, ladies and gentlemen, you have everything you need to build a very solid trading plan. When you can define your entry area in connection with momentum and path, and you say it is screaming in the direction of the trend, there's absolutely nothing in the way to create a problem, let me go define an entry area. We're going to talk about a high probability trend trade entry area first. If you're on NinjaTrader, when you have momentum and path, I think on TradingView, a lot of you are going to latch on to what we call a momentum trade. And that momentum trade says when everything is screaming down, I can't really find an example. There it is right there. Everything is going down. Sell a pullback to the zone, go down with it. When everything is screaming up, the same is true. We'll see if we can find some better examples of that today. It has been some straight line stuff today. But what we're going to do is we're going to go back to the idea that with momentum and path, there is opportunity. With momentum and path, we can define an entry. Your first entry is going to be the high probability trend trade entry. And let me show you exactly what that looks like. Let me find my pictures here. When my large chart has momentum, separation between the small and large, big gap between the two. When my large chart has not reached trouble and is breaking above previous trouble, rule number 3 says that you're going to buy or sell a pullback at an area inside of triggers. So we're literally going to look for a fight on a smaller, faster chart. We want that fight to go down to an area, fibs, mid bands, or yellow one-to-ones, and we want that area to be inside of triggers, guys, because triggers are going to show you where the retracement's most likely to occur. Areas within the triggers are going to show you where it's most likely to bounce. So when the large chart is up, when the large chart is strong, when the large chart has nothing in the way, a lot of you are jumping into the market over here with momentum and you're saying, man, everything is screaming, there's nothing in the way, I'm going to giddy up and jump in. Guys, those are short-term trades very often. Quick profits make the most sense. And once you get that reversal bar, your jump the fudge in trade is over, guys, and you have to make a decision. Because once that reversal bar prints, hey, good morning, Sid. Good to see you, man. Once that reversal bar prints and that market starts a retracement, and a retracement is defined as a small push, a small move counter to the underlying trend. And guys, your underlying trend is up, and it's up strong. and there's nothing in the way, you're going to identify the retracement zone through the triggers, large and synthetic, guys. From the highest point to the lowest point, that defines where your retracement is most likely to go. But trigger lines aren't bouncy, is an easy way to say it. They rarely create that ricochet that we're looking for. So inside of those triggers, below the highest line, above the lowest line, you're going to look for fibs, you're going to look for mid bands, you're going to look for yellow one-to-ones, guys. Sometimes there's multiples, and it'll create what I like to call the window of opportunity, where the market is most likely to bounce, most likely to continue in the direction of the trend. And you're also going to realize that if trigger lines define the retracement, if areas within the trigger lines define the entry, any line beyond the triggers, guys, and this is so important, any line beyond the triggers is not a part of your window. Once you get below the trigger lines for the trend trade, you don't know if, when, or where that market is going to continue up. So even in a short trade, there we go. First, you're going to wait for the retracement on the smaller, faster chart. You're going to define where the retracement is most likely to go through the trigger lines, and you're going to define where it's most likely to bounce by the areas within the triggers, fibs, mid bands, and yellow one-to-ones. Your limit order, and yeah, you're just going to wait for the market to come to you. Your limit order will be a tick or two below Fibonacci resistance to ride with the large chart advantages. Your entry will be a tick or two above Fibonacci support to go with those large chart advantages. And guys, once you learn this trade, once you can understand how to identify momentum, when you can recognize a clear path and define that first entry, it's going to open doors for the rest of the trades that are available. It's going to open doors for momentum style trades. It's going to open doors for high volume area trades. And yes, it's even going to open doors for those just jump in the fudge in trades. So let's talk about the advantages, and let's do them individually real quick. Momentum is always momentum, guys. It's nothing more than a separation between the small and the large. So if the background on NinjaTrader is green, the market is going up. I'm looking for rules to be met for high probability trend trades long. If the background is red, the market is going down. I'm looking for rules to be met for high probability trend trades short. And the first step in defining my advantages is making sure that there is space between the small and large in an uptrend, that there is space between the small and large in a downtrend, because that space lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. You're going to see it annotated on a lot of charts in the room, and separation means strength. Don't overthink it. Has nothing to do with price bars, has nothing to do with Fibonacci areas. It's a gap between small and large triggers railing in the direction of the trend. Your advantage goes away when your small triggers work inside of the large triggers. This is what we call a weakening of the large triggers. And when I have weak triggers, anything can happen up or down. I'm a huge fan of language. I want to show you one of the easiest ways to recognize this. Think of scissors. And when scissors are open, you can cut, guys. When scissors are open, you can make something happen with those scissors, arts and crafts, whatever you need to do. Open scissors get the job done. Guys, when those scissors close, it's done. The best you could do is maybe take a stab at things, right? So open scissors is your first advantage. Is everybody good with that? That's a pretty easy lesson, I think, in regards to lessons. Trading view is just a skosh different, guys. Momentum is always momentum. And when it looks like this, the only direction my brain is thinking is down. But trading view has a little bit different look because it's a 15-minute chart. There's a strong side of the triggers, there's a transition in the triggers, and then there's a weak side of the triggers. The momentum is down. The momentum is decidedly down in this picture. Smalls below the large, space between. That's an outstanding look. Guys, when you are left of the small triggers on TradingView on that 15-minute chart, this is where you have the highest advantage. This is where shorts are going to be the easiest, where you're looking for trend trades. Once you get to number 2 here, this is kind of a transition. This is where we're weakening the triggers with the price bars. You might have to manage just a little bit more assertively. And then when you get to the weak side of the triggers, guys, to the right side of the triggers, number 3 here, that's when, if you're taking shorts, it's so important to let that 1-minute chart really agree with those short trades. And then you can see that it breaks back out, strong, transition, and weak. So that's the one difference that you're going to have between NinjaTrader and TradingView, because NinjaTrader uses Renko. Momentum is an absolute consistent. It's always the gap. On TradingView, momentum is defined as strong, only looking for shorts, but you're going to refine it a little bit more based on price and where it is up against those triggers. So I wanted to share that with you. And now when we define a termination condition, I've got clear path, or I've got momentum. Momentum is rocking. Let's define a termination condition. Any horizontal line on your big chart, guys, when you're looking at NinjaTrader, any horizontal line on your big chart, divergence highs, divergence lows, Fibonacci support, Fibonacci resistance, yellow 1-to-1s, guys. These are the areas where the people in control of the market are making decisions. These are the areas that you know about long before you get to them. These are the areas that could stop, create a reversal, create a fight between buyers and sellers. So your large chart areas show you where the people that are creating these trends and these momentums and all that, guys, they're making decisions right at these key areas. You don't have to trade into them. You don't have to be a part of their decision-making process. On TradingView, it's the same thing. Look at that. That is, the zone was reached. And guys, there's your bounce. And you knew about this zone, and you don't have to trade into that zone, because that zone is where the people in control are most likely to make decisions. And this zone is where the people in control made their decisions and reversed the market. So we are going to do a simple little counting triggers drill. Every time we reach an area, every time that large crowd gets to an area, we're going to count triggers, guys. And if none of your trigger lines have made it through the area, and here's a great example, price comes down, hits Fibonacci support, both small and large triggers remain above, you have to believe in your heart that this area is going to hold, that this area is going to stop the market, that it's going to create a big, ugly, untradeable bounce that's going to ruin your money. And if you accept that, it's going to keep you out of a lot of avoidable losses. If you get to the area, but 2 of your triggers break through, both of the small, it lets you know, as long as there's momentum, that this area does have the potential to break. But guys, potential is just that. There's the potential every day that a plane's going to crash on my head, but I don't live my life based on potential. With 2 triggers through, it's only potential. And sure enough, that market went down. And with 2 triggers through, the market went up. And with 2 triggers through, the market went down. So while the potential is there, it's not the most likely scenario. Where's my other one? When 3 triggers break through the area, both of the smalls and 1 of the large, guys, this is when things start getting good. This is when that breakout has a higher chance. But the path is only clear. It is only clear when 4 triggers get above resistance. Resistance behaves as support. 4 triggers get below support. Support behaves as resistance. Guys, a clear path, the best of the best, is defined by 4 triggers getting through the area. So you can find your momentum. You can define your clear path. You can go get an entry area. And guys, all you need to do is practice a little bit. So we've just learned the looks, right? What's it look like to have momentum? How do I count triggers to know I'm not trading into trouble? Practice, 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 practice. Guys, get in the market, get out of the market, practice moving stops. You're on simulator, you're at the batting cages, guys. You can't strike out. All you can do is keep getting reps. You can get a little bit smarter every day by practicing following these rules. And there's a way to get to where you want to be even faster, guys. Show me what you're doing. Post it in the room. Hey, what's up, PFI? Haven't seen you in here in a while. Guys, every time you take a trade, post it in the room. Every time you look at your chart and you don't know what the hell's going on, post it in the room with a question. This is how you get to where you want to be. So often, all of you alpha male and females are like, you know what? I'll just listen to a couple videos and make $1,000,000 next week. And it just doesn't work that way, guys. You need feedback. You need to know what you're doing right and wrong. And the best part is you've got a coach right here that is just dedicated 5 days a week live. If you post this in the room and you say, hey, Mark, there's my momentum, and in regards to terminations, 2 triggers got above resistance. It has the potential to break. And I bought a pullback to an area inside of triggers, guys. If you go through those 3 concepts on every chart, this is what I saw, this is what I did, and where I did it, you get a private session with me. We're going to talk about the good in your chart reads. We're going to make sure that you're reading your indicators accurately. We're going to talk about your entries, make sure that it makes sense. We're going to talk about the risk that you put on that trade. We're going to talk about the way you manage that trade, guys. And there's going to be a lot of high fives, and there's going to be a little bit of corrective language. I want you to accept both. The more you post in this room, the quicker you're going to get to where you want to be. The second thing is keeping it simple. Guys, trading could be difficult if you choose to let it be difficult. Or trading can be just a couple advantages and sitting on your butt until you have an edge. 95% of the day is spent doing nothing, guys. I woke up and stared at my indicators for an hour, never took a trade. And now I'm teaching the class, and hopefully after class we find some rules met. But there's a lot of doing nothing. There's a whole lot of doing nothing, especially when you keep it simple. So I'm gonna drop a couple things in the room. I am going to drop a plan. Whether you are on TradingView, there's your TV plan. If you are on NinjaTrader, there's your KISS plan. Guys, this is an educational room, but if I see the rules met from one of these plans in a live scenario, we'll do it on simulator and let it play out. Track your performance, guys. I'm also giving you 2 spreadsheets. This is your TradingView journal that just got dropped into the chat box, and this is your Nexgen tracking sheet. The NinjaTrader tracking sheet dropped just below it. You are literally getting everything that you need. The NinjaTrader tracking sheet, for those of you that are new to NinjaTrader, for those of you that are learning these advantages, there's your strong triggers, over 50 pictures of strong triggers, and they're annotated because annotation is the key to recognition. And the annotation just says, check it out, the background is green, the smalls and large are green, the smalls are above the large, momentum, strong triggers, rule number 1 met. It's difficult to look at 50 pictures of a market that isn't moving and not let the lessons stick. We've got the same lessons for what it means to not have your rule met all the way across the board. There's over 500 pictures of Nexgen clients using the software. You can go through, you can look at these, you'll recognize that so many of them have momentum path and that well-defined entry, pull back to an area inside of triggers. That recognition through repetition is going to seal that look in your brain and make it easier for you. Ideas on management, patterns that repeat themselves, a place to build your plan, and even a tracking sheet, guys. And then when you go to the TradingView journal, high volume area trades, trend trades, momentum trades, the 3 trades on that plan, management, when not to trade, and then, guys, another tracking sheet. These tracking sheets are going to be what really pay dividends for you, because every time you take a trade, you should take a picture. From that picture, I know that because you're all amazing students, you're going to discuss momentum, path, and entry. You're going to get feedback on everything that you present. There's a section for feedback. You're going to see things like, this is amazing. This should be in your plan. This has all the advantages. You're also going to see, hey, you traded into a termination, or you jumped in too early, or do you notice how price didn't clear the area the way you thought it did, guys? And you're going to get that constructive criticism. But what that constructive criticism does for you is it begins to recognize the challenges that are holding you back from success and the patterns in you, and we will work together to fix them. So every morning, wake up, pour a cup of coffee, cup of tea, and say, hey, you know what? I'm going to look at what I did yesterday, and I'm going to ask myself 2 very important questions. What worked? What didn't work? How do I repeat what worked? How do I avoid what didn't work? Well, you're going to use the feedback to learn how to not do the things that are stealing success. You're going to use the feedback, but more importantly, you're going to use your annotations. On the ones that work, the way you annotate a chart, guys, you're literally writing a recipe for success. Trading is work, right? This is your new job. This is your new career. Put some work into it. And the more work you put into getting to where you want to be, the quicker you're going to get to where you want to be. So we've seen momentum. We know to count triggers. You know what? Let me give you guys this picture as well. We've defined an entry. Now we just got to look for advantages. You have a way to track your progress. You have sheets with looks of everything that you're looking for. There's even a picture right there. Guys, the only thing that you don't have at this point is experience. The only thing you don't have is the reps, the seat time, the time on the pond, whatever you want to call it. That's where your work comes in, guys, and that's what the rest of the day is going to be. It is going to be looking at charts live and going back to momentum, path, and entry. When they're all there, it's a high probability scenario. I feel good about the world. I can't wait to take that trade. If I'm missing one of my advantages, and it doesn't just have to be momentum, it could be a clear path. That's the second trade on that KISS plan that I dropped in the room. I have to say to myself, this isn't the perfect trade. It's a medium probability trade. And whatever advantage is missing, I'm going to lean heavy on the other two advantages to give me a better chance of success. I'm also going to look at charts. I'm going to say, I can't find momentum. There is no clear path. Why on earth am I looking for a trade with 2/3 of everything good gone? And guys, you control the entry. Nobody can make you enter the market. Nobody can make you start adding contracts because you're scared and you want to build a loser into a bigger loser. Nobody can make you do anything. You're in control of everything. And you're also in control of doing nothing, guys. So when you know what's working for you, when you know what's working against you, you can make the decisions not only about whether or not you're willing to get into the trade, but also how aggressively you may need to manage it. So the rest of our day, guys, is going to be momentum, path, and entry. Smalls below the large, space between. Would you give me a Y in the room if you see? Guys, the momentum is awesome. That's a market where the trigger lines tell me this is a market with the potential to continue in the direction of the trend. Does everybody see that price reached that blue Fibonacci area? Let me change my defaults on this one a little bit. I'm going to save that as my default. Yes. Okay. And let's count triggers, guys. Price reaches Fibonacci support. How many triggers have made it below Fibonacci support? Probably 0, right? Maybe 1. Guys, this is an area that could stop the market. This is an area that could create a big untradeable bounce. This is an area that could pull money right out of your account. You know about it, you see it, you have a recipe for it. My rules aren't met. My rules say don't take the trade into an area with no triggers through. Some of you are saying, but Mark, we have momentum. Guys, we had momentum right here, didn't we? And it didn't break. And we had momentum right here, and it didn't break. And we had momentum here, and it didn't break. Guys, momentum does not magically make fibs go away. So this would be no rules met. I'm not even looking for an entry. Smalls below the large. Does everybody see the momentum in the market? This is a market where the odds are favorable for it to continue down. I've got 1, 2, 3 triggers through the area. So let's take a picture and let's talk about how we can use advantages to make good decisions. A trade is first momentum. And ladies and gentlemen, the momentum is outstanding. And a trade next is a clear path. And without 4 triggers through, guys, I don't have a clear path. This only has the potential to break. I do have areas inside of triggers. Does everybody see that? The reversal bar, the retracement, right to areas inside of triggers. And you're saying to yourself, man, 2 out of 3, life is good with this potential to break. that's a good spot for a bounce. This is what we call a 50-50 trade, guys, and it's rooted in the potential to break. Divergence is the biggest killer of a 50-50 trade. Divergence is one of the biggest reasons this trade doesn't work out. And if you open up the simple optimize your chances of success plan, it says if divergence prints, guys, you're more likely to lose this trade than you are to win. You will win some of them, but if you go through 100 of them, you're more likely to lose this trade because of that loss of momentum on the small chart. And sure enough, they're still pushing up, aren't they? And this is what Nexgen does for you. If you're new in this room, guys, you have a plan with very simple, easy to follow rules to keep you from hoping. Every time your rules are met, ladies and gentlemen, you have an edge. You have an advantage. You have a pattern that you can prove wins more than it loses, which means that you should never hesitate on an entry because you know that it wins more than it loses. You can prove that it wins more than it loses. But when you go through the process of proving something wins more than it loses, you also prove that it does in fact lose. You also prove that when you have momentum and your path is clear, that pullback to an area inside of triggers is going to lose 20 to 30% of the time. When you understand that either outcome is possible, it helps remove the emotion from trading. And guys, it really keeps you focused on the best of the best. And this is what we call an avoidable loss. Doesn't fit the rules, and sure enough, they blow right through the areas inside of triggers. Pretty cool, right? Still haven't made it below Fibonacci support. What does TradingView say? TradingView says, well, you hit an area. Why on earth are you going short? That's an avoidable loss. And now this thing is just screaming north, isn't it? The small triggers are up. I'm on the strong side of those small triggers. Let me make this bigger for Jim. My only option is long. I'm above all the areas, but there's a lot of zones going in, right? The same is true on the S&P. I'm on the strong side of the triggers. There's a lot of momentum, but these one-to-ones, I've got triggers below it. I've got things trying to work above it. Let me make sure this chart's perfect before I do anything. Does everybody see crude oil has all the momentum? Darn that zone. That zone has been creating ugly bounces for the last 30 minutes. I don't have to trade into it. There's no reason to trade into it. My money is worth a clear path. We are cranking above, but we're on the weak side of the small triggers. Does everybody see how your 1-minute chart says down, but your 15-minute chart says up? But I'm on the weak side of the triggers, not the strong side of the triggers. So this says down with strength. This says I'm on the wrong side of those smalls for a push. Guys, looking for a short rather than a long, if there's room to trouble, just makes more sense. Even crypto, price gets above support, all the momentum comes right back to it, and this is where our bounce is happening. Pretty cool, right? Even on crypto. So what we need to do is just kind of learn the basics. How do I identify momentum? What's it going to take to get me a clear path? You guys see that tail? The market pulls right back to support inside of triggers with that momentum and path. It dances a little bit, but it ultimately rides momentum up to the fib. Does everybody see that? This is a study tool. When you have momentum and path, did the market pull back to an area in that trigger range? Absolutely. Did it get below those triggers? Absolutely not. Did all that momentum push it up to the fib? You're damn right it did. Guys, that's a great way to make a few $100. Go buy a waffle. You can study with that idea, though. You can study by scrolling back. Let's see if we can find momentum and path again. It's always a little harder on a Friday. This was Friday, momentum and the potential to break. Let's scroll back and see what that circle. See that tail? That tail is the pullback on the smaller, faster chart on that refinement chart. What does that tail look like over here? Pulls right back to a mid-band inside of triggers. It's just a pattern, guys. That's all it is. The market does the same darn thing every day. It goes up and down. That's the one thing you can be sure of, is the market's going to go up and down. Guys, my small triggers are up, but my large triggers are down. I don't have the momentum that I'm looking for. Price reached resistance. None of my triggers broke through. I don't have the path I'm looking for. But Mark, there's an area inside of triggers. Guys, that is 1 out of 3, and that is the siren song tempting you. Victor, take the trade. I don't give trading advice, but it's tempting you. It wants you to take that trade. The same way it wanted you to take that short trade when the rules aren't met. Guys, it's okay to do nothing. The futures markets trade billions daily. Billions. Find 400 out of those billions, you're in a 6-figure income based on your trading. All right, guys, I'm going to click on some charts and let's see what you guys did. Joel got us going this morning. And Joel says, check it out, Mark. I'm on the weak side of the triggers. Everything's going up, but I don't have momentum. My smaller chart has angled down with strength. I'm going to sell a mid-band and ride it down to the 1-to-1s. And it's just a trend trade. But guys, the language on the minute charts is a little different for the trades from the Renko. One of the things that I want to encourage you guys, because I've got a lot of you that are going from Renko to TradingView, and I've got a lot of you that are starting on TradingView, and a lot of you that may end up at TradingView. The rules are different because the bars are different. In TradingView, this is a 15-minute. This is a 1-minute. Guys, inside of 15 minutes on your large chart, let me give you an example. So we'll go from 9 to 9:15, guys, and I'm going to put a box around it. From 9 to 9:15, which is right about here, Renko has 3 bars. If you scroll back to a time when the market isn't moving quite as fast, it may have 10 bars, guys. You may get 20 bars of Renko before you get the next bar. It's a matter of ticks. It's not a matter of time. On TradingView, it's a matter of time. So the rules have to be a little different. And the rules on TradingView say never fight those strong triggers. If your 1-minute triggers are against you, wait till you get to the other side. If your 1-minute triggers are odds favorable, momentum down, the way they were for Joel, that's when you're going to buy or sell an area. So remember that they are different. Please don't treat your Renko bar charts like a minute bar chart. Please don't treat your minute bar charts like a Renko bar chart. You have to allow them to be separate from one another, or it's going to create confusion in rules. Ali, let's see what you did, my friend. All right. Strong triggers, absolutely. You say 50-50 on the mid-band. Right on. Didn't reach the 1-to-1s. Ollie, 1, 2, 3 divergences. So let's talk. I like it, PFI. Let me answer you just 1 second. So Ollie, are you with me in here? Cool. So this is a down divergence. This is a down divergence. This is an up divergence. You can't, so these are equal opposite forces. They don't cancel each other out, but neither of them really has a bearing on anything. There's a couple things that I notice. You have a fib over here at 63.50, and on your large chart, you're not showing any fibs. So you're not running your synthetics. No, you're okay. Don't ever be sorry, guys. Mistakes are how we get better, right? Misreads are how you get the knowledge to have the correct read. So, Ollie, I noticed that you're not running your synthetics. Is it a tick data issue? Because you should have had a fib right here, and you should have had a fib right here on your large chart. And let me digress from your chart for just a second to show you guys why we have happened to you last week. No worries. Guys, your large chart on NinjaTrader has Fibonacci areas from 3 different time frames. You're going to have one from your 5-1 chart, which is your entry chart, and you're going to have one from a 21-3 chart, which is an even higher time frame, and you're going to have the one that extends all the way to the right, and this is from your large chart from the 13-2. So the workspaces were built, excuse me, with 3 time frames to give you the absolute highest accuracy. When I tell you guys that horizontal lines on a large chart are where decisions are made, don't rate them. Don't give them strength one over the other, because I want you to see here a 21-3, stop the market. Here a divergence low, stop the market. Guys, it was right here with a 13-2, stop the market. Down here with a 13-2, stop the market. A 5-1, stop the market right here. And yellow 1-1, stop the market right here. It's frustrating sometimes because you're like, man, I'm never going to get a trade. This stupid lines keep stopping the market. Guys, these stupid lines keep you from trying those long trades, and these stupid lines keep you from trying to take these short trades. And my brother is going to tan my hide for calling them stupid lines. You get the highest level of accuracy when you work with a complete workspace, guys. The more you alter things, the more difficult it becomes for you. So Ollie, you had some fibs and you had some fibs, and now we're looking for the short trade from the area inside of triggers. You've got the momentum, and it has the potential to break, and there's that divergence right there. Is this from this morning, Ollie? This is this morning's trade, right? Cool. Were you with me in the room when I said this divergence, and see how I've got fibs there? This divergence is the biggest killer of those potential to break trades. So Ollie, what you never saw was that amazing fib saying, hey, this is only the potential. That divergence is likely to screw up your good time. And Ollie, sure enough, it killed your short trade. Does that make sense? So I love it, and it's okay that you took it, right? We're learning, we're building, you're recognizing that you just showed up to a gunfight with a little knife. So Ollie, right-click on your left chart, your big chart, and do me a favor. Make sure that tick replay is checked. If it is, you should get those synthetics. If you don't get the synthetics, even with tick replay checked, you're probably going to have to rebuild that workspace or at least that chart. It is an awesome look. If there's no fibs to worry about, beautiful. But because you see the fib here, you have to believe that this is only the potential to break. It's not a clear path yet. And let's talk about the midband as a termination condition, guys. The midband can be a termination condition on your large chart. So here we go. There is one time when your midband is considered a termination condition. And this one even has a fib with it too. But the midband is a termination condition. I'm going to type it out. We'll make a little study guide for you guys. Is a termination condition on the large chart if price reaches it and the large triggers remain a full bar away. This is the only time that the midband is a termination condition. If I have room to make a reversal bar all the way back to those large triggers, that is what we call the gap theory. And I'm going to open up your Nexgen tracking sheet, guys. And if I go to the client trades over here on patterns that repeat themselves, you're going to see this a lot. So let's go. I'm just going to click one that says gap theory. Price comes down, and if it accelerates away from these large triggers, hits a midband, hits 1-to-1s, hits a fib. Ollie, if those large triggers are above the reversal bar marker, there's room for a full bar to get back to them. That midband is a termination condition. Does that make sense? So anytime I look at price reaching a mid-band, oh, no worries. I'm going to say, where are my large triggers? And Victor, I'll get you. So anytime price reaches a mid-band area and the large triggers are a full bar away, price is more likely to close the gap back to those triggers than it is to just arbitrarily go down. And you're going to see this a lot on the large chart. Bum, 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 bum. Even here where the large triggers don't follow, you can see that it comes back. There's your mid-band ollie, sucks right back to the large triggers. There's your fib, sucks right back to the large triggers. All the way up, back to the large triggers. And you see this over and over and over. And all it says is, hey, don't try the short there. That's the only time that mid-band gives me cause for pause. Man, divergence, one little cyan line keeps us out of that loser. Good stuff. Great chart, Ollie. Thank you for posting that. PFI, took a break from trading, coming back. One of the most common things that ever happens. No worries. Well, PFI, when you get back, we're gonna do a little talk, just for the whole room, because a lot of people walk away and come back. I'm gonna talk about how to make the comeback more successful. Ollie, great job on that trade. One little line was your reason to not enter. I hope that made sense. No, that's okay. Steve Diego, odds favorable momentum. Everything says down. Entry below the mid-band, which is no longer a term. And then he gets in below the fib. Let's price break below those Fibonacci areas and just grabs. Boom. Let me get a quick $100. Well, 2 contracts, a little more than that. And guys, this is just jumping the fudge in. Because of momentum, because that mid-band's not a termination, and Steve not running synthetics over here, right? Quick profits. He gets below the Fibonacci line that could create a bounce. In and out with momentum on 2 charts. And then when that momentum trade fails, guys, and that divergence printed, that was the end of the down move. Nice trade, Steve. I know you guys are trying to conserve resources by not running your synthetics. I'm telling you, you're literally putting a bullet in the top of your foot. Victor, you're waiting for the crude oil gladiators to fight it out. You'll rummage through the carcasses after to find your advantages. I like it. Paints a picture too. And then Victor said, we'll mark 3 divergences in the same price range as a termination as well. At least run them on 1 chart. Yep, give yourself that advantage. John Novak worked hard to give you guys an edge every time you looked at a chart. Well, my Ninja Trader just crashed. Dagnabbit. Reason 174. I'm a fan of TradingView. Let me bring Ninja Trader back up. And Victor, we'll talk about 3 divergences in the same price range. Because Ollie pointed out something pretty cool, right? Ollie says, check it out. 3 divergences. 1, 2, and then 1 going the other direction. Let's go in and talk about 3 divergences real quick. Guys, large chart is where I look for divergence, or is where I look for terminations first. Large chart sets me up for success. Large chart says, hey, check it out. Define your areas, define your momentum, define your trend on a large chart. There is one small chart termination condition, and it is the 3 divergences on a small chart. And 3 divergences, whether it's big chart or small chart, guys, can terminate a trend. 3 divergences on the small chart is going to show you change that you can't see on a large chart. If the large chart is screaming down, the large chart has a clear path. 3 divergences on the small chart is the only time when I have momentum and clear path that I let the small chart talk me out of an entry. So absolutely, Victor, 3 divergences in the same location on a small chart can terminate the trend. And you'll use the same concept. When the small and large get below it, those areas are broken. But they do all need to be 3 divergences down, right? Or 3 divergences up. And this just says, hey, don't try that next short, or hey, don't try that next long. There could be a little bit more of a push in the opposite direction. Good lesson, Victor. Thank you for that. All right. Russ, momentum with a clear path to the fib. But you traded directly into a fib, right? I mean, nothing even got above it. Russ. And guys, I refuse to tell you how to trade. Let me get your time, 21:58, 21:58. So this is the fib that we're looking at. And Russ says, check it out. I've got all the momentum in the world. 1, 2 triggers through. The potential to break is there because of this momentum. And then Russ, it's easier. Let me blow this up. Guys, remember when I said the large crowd is making decisions? And Russ, you may have done this. It's hard to see. If the large crowd, the people that control the market, the ladies and gentlemen that establish momentum and path, if they're going to make decisions here, letting the back of the bar on your smaller, faster chart, guys, let the back of a price bar get away from that decision-making zone. This is going to increase the likelihood of success an awful lot because these areas can create bounces. These areas can create bounces. And I can't tell if you did. You may have done it, Russ. You may have let the back of the bar clear. And then you're in at 59 and you are out at 62, $60 a contract, 3 contracts, quick $195. It's hard to not eat when you're making $200 a pop 5 or 6 times a day. Nice trade, Russ. And it looks like you did let the back of the bar clear. All right, Andy V. I love this. Time for some chart reads. All right, so Andy V says, Mark, this is momentum. This is the easiest path I could ever get, or the easiest look to learn. And Andy, you nailed it. Separation is beautiful. I'm going to take a picture of your picture. And I'm going to show you kind of the way. Let's bar by bar. And Andy, let me show you how this works. Get back down here. You know what, we'll get it in just a second. Let's go to your picture because I want to use the one that's familiar to you. Momentum is spot on, 100% gold star, best of the best. So when price reaches this Fibonacci resistance, absolutely no triggers through, that's your stop sign. That's the, okay, let's pause, let's wait, let's see what happens. And then when 2 triggers get through, Andy, and 2 triggers are not, so we get the small triggers through and the large triggers below, that's your potential to break. Does that make sense? Potential to break because smalls are through and large are not. And then, Andy, this is the cool lesson that I had to learn. Until price gets to this area, until those price bars reach that divergence high, the same way we needed it to reach Fibonacci support, I'm not going to call that a termination condition. If my rules are met to take a long trade, I'm going to call that a target. Because until price gets there, there's no reaction from it. So this is one of those things that you can do is when you go through the idea of what does it take to create a termination condition? Well, price has to reach that area. We can call it a target, and there's a very similar look until price gets there. So I love this picture, guys, because there's a lot of things that new users do. And when I say new users do this, guys, what I'm telling you is that as a new user, I did this and I had to get corrected. So I try to get a little preemptive strike here. When everything is up and your rules are met, and you're thinking that that is a termination condition, guys, you've got about $80 worth of profit from the top of the bar to trouble, right? It's not a termination yet. This is one of the reasons rule number 3 is so effective, guys, because by the time you get a pullback to an area inside of triggers and it continues to that target, you've actually got about $320 worth of profit. Rule number 3 increases profitability tenfold. Well, maybe not tenfold, fourfold, 75%. So that's why, and Andy, you probably don't need this lesson the way I'm doing it. Don't call anything a termination until price gets there. Let it be a target. Because if your rules are met over here, you know exactly where the market may go. You know exactly where it may stop. And what a great place to take profits. Good stuff, Andy. Good to see you posting. Relearning the computer. Last was Windows 2009. Awesome. I like that you're just stating what you see. Keep doing this every day, Andy. We're going to get you right where you want to be. Caleb got out at this fib. Well, that's a divergence low. So let's look at your trade from 82. Caleb, I love that you got in. And you want to know the truth? I can see you got in. 100%, right? I can see you got out. But let's talk about the whys, Caleb, because the whys are your recipe for success. Every chart, guys, the only thing I ask of you guys in this room is that you tell me what you saw with momentum, that you describe your termination conditions, whether it was a termination, the potential to break, or a clear path, and why you entered. And Caleb, I know I'm a giant thorn in your side by asking this when you post, but how do we make it repeatable? How do we know if it needed to be managed aggressively? Guys, get to the point to where you talk in terms of advantages every time you take a picture. Because what happens is if you always go back to momentum, clear path, and entry. This was your entry right here on that little tail. Momentum is 100%. Does everybody see it? Caleb, more importantly, do you see it? Separation between the small and large. The momentum is there. Life is good. The odds are favorable. This market will continue down. I'll take your silence as a yes. Price had reached Fibonacci support. Not one trigger line made it through there. And what this means to me is Caleb, you're trading directly into a termination condition. 100%. Now, I don't tell you whether or not you should. But if you know this is a termination condition, what it does for you, Caleb, is it says, hey, if something changes, I will need to manage without that clear path. Does that make sense? And then once you're in, why did I get in? On the pullback. I love that. Got in on a pullback at an area inside of triggers. Guys, that language is going to make it easier. That language is going to make it easier. So you had 2 out of 3. Your entry is beautiful. Your challenge was the termination condition. And you got out at trouble below, which is brilliant. I love it. Caleb, it's a nice trade. You had 2 out of 3. Your management hat's on, and you get out at trouble. Really well done. The annotations are not for me, ladies and gentlemen. I can look at your charts and talk about it all day long, know exactly what you did. In most instances, I even know what you were thinking because I've been doing this for a while. So, Caleb, here's the next question. With all of that momentum and now you have the potential to break, why no trend trade here? Because here you have momentum, potential to break, pull back to the area inside of triggers. Why no trend trade here? The language is the same, right? You achieved your profit target, done for the day. Nicely done, Caleb. I love it. Great job, dude. All right, let's see who's next. Andy Man, little trading view for you guys. Whew. Andy, the background is still red. These triggers have not crossed over. Andy, you're on the strong side of triggers rolling up. Does that make sense? Termination, triggers rolling, you're above trouble, you get past trouble, and with odds favorable momentum, you just jump in and jump out. This is about as close to a chili dog as you can get on TradingView. Strong side of triggers that have rolled up, odds favorable momentum, in at 08, out at 16. Not a momentum style trade because you're not trading from the area, Andy. This is literally, I'm jumping in and hoping. Jumping in and hoping, and man, when everything's going right, that hope works out a little bit. Nicely done, Andy. All right, Victor. Momentum, buckets full. Clear path, not even with a Sherman tank. You had the potential to break. Do you see it? Or are we looking down here? So Victor, here you had the potential to break. You had all the momentum. You did have an area inside of triggers. The one thing that was going against it was that divergence on the smaller, faster chart. That weak top. It's all right. Just relax. And be careful saying scissors are closing, right? Because if this thing keeps going down, those scissors may stay open. You'll see a little bounce in the middle. But you're just saying, I'm not trading into a termination condition. And Victor, what a wonderful way to look at a market, right? I don't have to trade into a termination condition to be successful. I don't have to hope areas break, right? And the reason rule number 2 is a thing is because more often than not, guys, 70 to 80% of the time trading into a termination condition is going to mess up your good time. Victor, great patience, man. Great patience, great chart read. All right, Chariot. No divergence down here at all. Here you had strong triggers. Here you had strong triggers. Here you had strong triggers. Here you had weak triggers. Chariot, I love the chart read. And just one little correction. Divergence is right here. Negative number, magenta line. That's a loss of momentum. There's another one. There's another one. There's another one. So you'll always see the line and that negative number, and that's what's going to define divergence. What you have here, and man, this is going to be a pretty good lesson, is that price reached an area. There's still 4 triggers above. That's a termination. No short trades. Does that make sense, Chariot? Beautiful read everywhere. That's the only thing. It's a termination, and that's your divergence. Great stuff, man. Keep doing this. This is how you get good at the reads. Nicely done. All right, I'm going to read what John Novak said. He likes to surprise me with dissertations in the room sometimes. Want to give all new users a bit of food for thought for their educational journey. Trade probability and management. High probability trade. All indicators across multiple charts align with the trade rules. New users, try to trade this only. In my opinion, this will limit you to too few trades in a day. Medium probability trades, guys. This means that most indicators align, but a small issue exists. For example, hold on. Let me show you what I mean when we talk about a medium probability scenario. And Chariot, or was it, nope, Caleb, sorry. Caleb gave us the idea there. Caleb says, an issue exists. I have momentum. I can define an entry, but I've got a fib in the way. Guys, that's medium probability. You can identify the issue. This is where one thing is against them, but this is where you think you will get a lot more chances to make money as long as you're doing it with enough momentum. These are the take and manage trades because they will win more than they do not if you manage well. Sometimes it's smaller targets. Sometimes it's getting out with divergence. Take and manage is my saying for these. Low probability. The trade setup has multiple conflicting signals, reducing the chance of success. Do not take these. So guys, John Novak just gave you this picture written out. When everything is perfect, that's your best trade. The majority of your trades will have an issue, manage, and then when it's low probability and there's multiple conflictions, that's the tough one. So guys, this picture that I share every morning is exactly what John Novak just said in the room. Got to be some truth to it, right? And John says, learning curve for lesser trades is 12 to 24 months because you're learning to read your indicators quickly. Get the reps, guys. Post them in the room. Have all the conversations about them. And you'll be able to do what you need to do. So let's go to the live chart. Guys, I don't have momentum. My smalls are down. My large are up. The triggers are inside, right? I don't have a clear path down. Price reached Fibonacci support. Every trigger is above. I don't have a clear path up. I don't have a clear path down. I don't have momentum. Can you guys give me a why in the room that I don't have what I need on a large chart to even bother looking for an entry on the small chart per the plan? All right, I forgot that I crashed. Let's open up that is the S&P. Let's go take a look at crude oil. And let's see what crude oil is saying. Whew, terminations held. All right, guys, I have smalls above the large. I have momentum. I have 1, 2, 3 triggers through, the potential to break. No divergence, strong triggers, pull back to an area inside of triggers. Ladies and gentlemen, this fits the KISS plan. And I want to bring up the KISS plan, and I'm going to show you how having a checklist pays dividends, guys. That's old. Is my... Hold on. Ha, I'm not connected. Sorry, guys. I'm not connected. Am I on 08? No, I'm on 09. I just didn't have data. I didn't have data on. Your NinjaTrader updated to 09 on the ES. Jen, the ES doesn't roll every month. Yeah, this looks more like it, right? Hold on. I think today is the roll day, right? For NinjaTrader. The roll date is Monday before the third Friday of the contract expiration date. For the current date, July 21st, 2025. The upcoming contract is September 2025, which expires the third Friday, September 19th. Therefore, the roll date for the September 25 contract is September 15th. So we are in the August contract in the S&P. Did John answer it? ES was June. I'm in September now. So we've been in the September contract for a while now. Every 3 months. So crude rolled to 09. And Jen, we're in the September contract because June rolled June 21st. July, August, September is the next one. So we'll roll September 15th every 3 months. So if you're on 09, you're good. You're right where you need to be. And now with a little data, the market's actually moving. You're welcome. All right, guys, I'm going to take a couple minutes and go stretch my legs. When I come back, we'll keep doing the chart reads. We'll do a lot of TradingView. We'll do a lot of NinjaTrader. If you have questions, post them. If you have pictures, post them. If you have questions, post them. and we will get you where you want to be, guys. That's how we do it. So I'm going to mute for a second. I'll be back in about 5 minutes. Here we go, here we go. So let's look at it. Smalls are inside of the large. And guys, let me know if this makes sense for you. I'm going to get rid of some stuff. Smalls are inside of the large. Does everyone see this look right here? This is not my look for momentum. This is a look that says anything could happen up or down. If all I'm doing is going basic, there's one of them that have gone away. Clear path, 100%. All of my triggers are below the area. I haven't reached another area. Guys, in regards to path, that is as clear as it gets. And this is where the language for entry is helpful. I'm going to pull back. I'm going to sell a pullback at an area. And then it's this magic phrase right here that keeps you out of trouble. Inside of triggers. So when we go back and we look, my triggers are here, but my areas are here. And guys, to be completely honest with you, I don't know if the midband's going to hold. I don't know if that fib's going to hold. I don't know if this fib's going to hold. Hell, I don't know if it's going to be this one or even that midband. So what I run into is an inability to clearly define my entry point based on the very basic rules. Does that make sense to you guys? So this is where there's a couple different ways to read this chart, guys. If price reaches 65.46 and every one of my triggers is below it, does that scream to you no more long trades? It should, right? That's not my best look for a long. It doesn't mean just jump in. So guys, we've got a range of areas that could create a bounce to go down with a clear path. What I don't have is the momentum to push that trade down. So I don't want to just jump in hoping something happens. There are a lot of traders in this world that will say, okay, with the clear path, with all my indicators down, with areas that could create a bounce, if I get a reversal bar in the direction of the trade, I'll consider taking a short to see if they wanted to make it to the fib. The challenge with that, guys, and this is a challenge that you have to accept, I can't tell you when to trade, is that you know that a clear path is the only thing going for you in this trade. Does that make sense? It's instantly low probability just based on that idea that I don't have momentum or a well-defined entry area. Some of you will say, I love this trade from the edge from 65.46. Some of you will say, it's not my trade. It's not my job to tell you. But do you see how because I know what I'm up against, I can make the choice on whether or not I want to take that trade? You can make the choice on whether or not you want to take that trade. And to be honest with you guys, if it doesn't fit in my plan, if I don't have a checklist to enter that market, it's just simply not my trade. Didn't quite have the momentum. No areas inside of triggers. The fib didn't hold. The midband got run over a little bit, and now it's starting to go up. And there's kind of the example of after. I don't have momentum, but I do have a clear path. I'm not sure what's going to create a bounce. If I wait for the reversal bar, I have a place for my stop. I'll see what happens. And we'll see what happens. What does TradingView say? Let's go back. We'll start on the NASDAQ. I have odds favorable momentum up. I have absolutely nothing in the way. Ladies and gentlemen, if my brain says anything but longs, I am not doing it right. Doesn't mean there was a trade there. Odds favorable momentum, nothing in the way. Don't fight strong triggers. Once you get to the other side of them, gets pretty easy. Odds favorable momentum, but I definitely have an area. If you traded to the area, life was probably pretty easy. If you traded into the area, you're struggling. Odds favorable, momentum, nothing in the way. Guys, do these chart reads make sense? There's no entry. I don't have an entry yet. So fast, no way for us to keep up with what you read. I'm sorry, John. Strong triggers. Nothing in the way. The only thought is up in this. Sorry, I'll slow down. Separation between the small and large. It's the only area on the radar. The smalls are through. Price is above. Guys, we're already outside of the outer bounds here. Don't have any rules met. But it's certainly just up. This would be one of those instances where if I get back inside of those outer bands, it means my triggers are probably rolled, and we'd start looking for HVA lines and trend trades. Separation between the small and large lets me know that the odds are favorable for the market to continue up. We'll blow that up. Price has not reached any areas. We're getting above all the problem areas. Strong triggers on the smaller, faster chart with odds favorable momentum on both charts, with nothing in the way on both charts. Activating a limit order right at a high volume area with strong triggers on both. This fits the plan, guys. If you go back to the trading view plan, momentum trade. No termination zones reached on the 15-minute. Both charts strong triggers. Any pullback to an HVA line for entry. Does that make sense? And I didn't have to guess if I have my advantages. What I was able to do is I'm able to look at a market and just look at my checklist. No terminations, yes. Both charts strong triggers, yes. Any pullback to an HVA, yes. Does that make sense, everybody? It doesn't guarantee the entry, but what I do know is that I'm following a plan, that I'm looking at rules. And for those of you that are momentum traders, that's the one that fits the plan. Any questions? How we doing? Crude oil. Strong triggers down. Does everybody see it? Odds favorable, momentum down. We've reached the area. Pulling back to resistance, back to one-to-ones in a zone, back to a mid-band. If you were going to try the trend trade, based on everything down, room back to trouble, this is where minute bars are a little bit different than Rico bars. It's not sell the area, but rather sell a close on the correct side of the small triggers at the 1 minute midband. It's a little safeguard because when these triggers are up strong, it's quite the fight, guys. And those small triggers love to win that fight. So you have to wait for a close on the correct side of those small triggers, understanding you have trouble present here, trouble present here. So John, if you bought an HVA, where would you put your stop on this particular trade? Below the outer band. So John says, and this is a pretty good example, guys, where shouldn't the market go is exactly the answer that's being, or the question that's being asked. If I enter at the mid band, or at the HBA, excuse me, my stop Should go down here below that outer band. And what you can do is you can say if this, then that, right? HVA plus a zone is always better. I agree 100%. But you don't always get it. So how do you manage your risk? Well, if it gets below this HVA, if it gets back inside of that outer band, then John Novak gets the microphone because I can't see what he sees when he just types in the room. Give it room, guys. Say, I like this trade. I like the advantages. If it gets below where my advantages are, it's okay to exit that trade. I choose to exit because of the loss of advantage. Still hasn't stopped, has it? Rules for the win, ladies and gentlemen. Rules for the win. Never even got a reversal bar. If you were hoping resistance was going to hold, never even got a reversal bar. Does everybody see it? Just go back to the basics. Momentum, path, defined entry. That's the best of the best. When 2 out of 3 go away, life becomes difficult. We are officially in a strong trending market, ladies and gentlemen. Well, actually, we're not. We got the reversal bar. Clear path. There's your reversal bar. Nothing's changed on the large chart, the big slow chart. It's still up. It's up strong. Nothing in the way. There's another HVA line. But I don't have strong triggers this time. I don't have separation between the small and large. There's a big difference between this trigger look and this trigger look. Let's make it bigger. This is odds favorable momentum, guys. This is separation between the small and large. That's my best of the best look. This is small triggers inside of the large. This is weakness. This is anything could happen. I don't have rules that say buy the HVA at 63.70 because I don't have the momentum that I need to take a momentum trade. Does that make sense to everybody? Trying to get a little trading view in here. Same look on the NASDAQ. Everything says up, looking for a way to capitalize on up. There was your close below the small triggers at the mid-band and the zones with strong triggers on the large chart. Room to get back to trouble. And guys, this zone represents the first trouble spot as you're coming through. Let's see what Pete did. Pete, medium probability trend trade managed effectively. Weak top, triggers down and separated. Tail into momentum right into a fib. You take the shot on the mid-band, manage assertively. When there are no changes at the fib, Pete says, I can hold that one for a while. Nice trade, Pete. Nice trading. Understanding what you're up against. If a management opportunity presents itself, you'll take it. If not, let's get paid. Nicely done. Nicely done. 2 out of 3, guys. 2 out of 3 is going to be the majority of your trades. 2 out of 3 advantages is going to be what you see more often than you don't. 2 out of 3 advantages, guys, means that you have to manage. Or you have to be willing to keep your risk. But you know where trouble is. If you have zones, you know where trouble is. If you have one-to-ones, you know where trouble is. Of course, that one's going to go from the HVA with weaker triggers, just to prove me wrong today. Guys, what do you want to talk about? I can ramble all day long, but I've only got 5 charts to look at, 6 charts to look at, and it only takes a couple seconds. You guys want to do a little hold or break drill? Let's do that. I'm going to back up. And we're going to do most current bar, ladies and gentlemen. So we're looking right here. For you guys working on termination conditions, this is a pretty good drill. You want to do it on crude oil, Victor? Done. All you have to do is ask, right? All you have to do is ask. So I'm going to start us right here, most current bar. So price reaches the divergence low. And guys, all we're doing is counting triggers. And we're going to get caught in a little consolidation here, I think. All we're doing is counting triggers. So price reaches a divergence low. 4 triggers or above. What do you guys think? Hold or break? If I'm looking at the live market and I'm trying to make a decision, do I have a clear path? Does it have the potential to break? Or is it a termination condition? What do you think? Victor, you called it. What do you think? It's a termination. Absolutely. And the market goes down, and the smalls get through, and the large get through, and now that termination is broken, looking for opportunity. And we hit Fibonacci support, guys. How many triggers are through? 1 line of the small, 3 lines above. Hold or break, what do you think? Guys, if you go through and do this drill just on your own time, do it on market replay, you start losing your desire to trade into areas. What do we think? Hold or break? Hold, absolutely, Andy. And it hits the second one and 1 line through, and it's still hold. Now those areas have the potential to break, right? But they're not broken. Could look for an opportunity. And guys, this is a part of trading. There will be times when you'll have 3 areas stacked. And your brain is going to tell you, man, I can't find an entry. I can't get a trade. There's just nothing for me to do. Has anyone ever done that and gotten frustrated? How am I ever going to take a trade if these fibs keep giving me the potential to stop? Guys, that was 520, 530, 530. This is like a 15-minute time frame. Whoops. And it saves your bacon. Good call, Andy V. It did hold. And look at that big retracement. And then the market pushes up. Hits Fibonacci resistance. All the triggers remain below. In the moment, guys, are we thinking hold or break? Are we just jumping into the market hoping that momentum kills a fib? Perfect, Kathy. We're going to say hold. 2 triggers get above. It has the potential to break. Do you guys see it? We go from hold to potential. And it's still only 2 triggers. And it doesn't break. So let's see if we can incorporate a small chart lesson. Let's see what the small chart told us up there. Actually, that small chart's a pretty good look. Watch how divergence kills the trade again, go. Potential to break, no divergence, pulls back to the area, doesn't get outside of the triggers. Guys, this is an awesome medium probability scenario looking for a long trade. Divergence kills that trade. Remember when we talked about divergence is a loss of momentum? It takes momentum to break the areas. Guys, that was the perfect looking trade until that divergence printed, and then it took the trade off the table. Market pushes down. There's your fib. Hold or break. It's just hold. Guys, you could do this all day long. Hold or break, hold or break, hold or break. Sometimes they break. And sometimes there's opportunities in there on medium probability trades. So here is the reverse engineering, guys. Price reaches Fibonacci resistance. The triggers are days below. Hold or break. Most likely. That's it. I'm not saying definitive. Most likely to hold the market, right? Even with the triggers up, even with the background green, remember when we said with all the triggers below, with everything going down, if I were going to try that short trade, waiting for a reversal bar, at least gives me a shot, keeps me from fighting, gives me a little indication that the market may go. And there it is. No long trades into the area. And guys, with a little bit of practice and a little bit of repetition, what you'll find is that you may find a way to go the other way based on what you see. Let's see what John Novak did. Super strong triggers. He buys the high volume area on the way up. Where was your high volume area? You didn't get a confirmation bar yet. And then added 2 more on the way up. Nice trade, John. Weak triggers, and sure enough, it pushes back, guys. Exactly, I won't say predicted, but exactly what the indicator said, right? This all says up and strong. Weak triggers said don't just buy a green line. And look what happens. Pretty cool. Does that make sense for you guys looking for momentum trades? Out below the HVA for a few ticks. Looks like bait. Nice management, John. With the weak triggers, getting below the smalls, smalls pushing down, you don't have to hope. And now everything still says up. The momentum is still strong, but I'm not going to fight those triggers, guys. You quit smoking hopium a while back? That's good. That's a good thing. And there is that chart. Great looking long. Everything's going up. Great management opportunity. Strong triggers down. We're getting into that transition phase. On those small triggers, guys, everything is still up strong. But because we're inside of the triggers, this is for you TradingView people. Strong side, transition. With transition and strong triggers down, there are no long trades yet. John says, figure we at least go to 1-to-1s, if not 23,497. Oh, are you saying up? And it still may, right? It still may go to 24,497. 23,497, which is about right there. Triggers are still up. Triggers are still strong. We just need to slow down here to go up with this. Does that make sense, TradingView people? It's still very much up. But your 1 minute is buying you some patience. Your 1 minute is saying, hey, don't fight it. Don't hope. Let it slow down. Oh, John's got a fib up there. Using both Rinko and TradingView. I like it. If you have the tools, Use them. If you have the tools, use them. What would you guys like to talk about? Trend trade worked, didn't it? Never mind your notes. Russ, I'm incapable of never minding the notes. Let's see what happened. Figure divergence would show up with the yellows hanging around on the small chart. Right here? So you jumped in. Let me see what you did here. It's hard to tell where you're doing what you're doing. You've got circles everywhere, and I don't know what it means. So strong triggers up, you go short, and you do get paid. Strong triggers up, you go long, and you do get paid. What did the large chart say? At 8:14. At 8:14. Strong triggers up, right? So Russ, if we were playing the aggressive versus conservative game, strong triggers, everything up, go short against strong triggers, right? You didn't know divergence was going to print. You didn't even get below the smalls. You just hoped that the one-to-ones would hold. I'm glad it did. Paid creates a false sense of security, especially on the NASDAQ. You're more likely to get absolutely annihilated on this trade than you are to win it. But once you go the other direction with all the advantages, it's stress-free. Does that make sense, Russ? I appreciate the post. One of them is a great way to blow out accounts. One of them is a great way to build accounts. The testicular fortitude that comes with simulator is great, without a doubt. Trying some things. So Russ, something to think about on your plan. If I'm going to fight everything, fighting from the other side of these small triggers is at least going to give you a fighting chance. And you can see it. As long as they're screaming up, it's going up. As long as it's screaming up, they're going up. On the NASDAQ, when you get to the other side of these triggers, if you're thinking about taking a chance, brain damage compared to your rules met, it's all right. Look where you're at. You're in the risk-free arena, Russ, and you're testing patterns. With all the strong triggers and not a clear path, look at this. It pulls back right to the area inside of triggers, close on the correct side of the triggers on the NASDAQ, Russ, and it is rocket ship to Mars. There is your medium probability trend trade. Does that make sense? There's your potential short, right? Everything rolls. I'm not sure if this is going to hold, that is going to hold. I don't know if it's going to go up to these, but if I get in on the other side of those small triggers, I've got a fighting chance all the way down to trouble. That's a NASDAQ thing, Russ, very much. And the NASDAQ, because your entry chart is a 13.2, it's just it's a different look. Because it's a 13.2, because it's a bigger chart, your large chart on the NASDAQ, or your small chart on the NASDAQ, is the large chart on any other market. And look at when these are screaming up, it doesn't go down until it closes on the other side. And the same is true here. When it's screaming down, we're not taking long trades against that, right? If we're going to try it, we're going to get in on the good side of things. So good little NASDAQ lesson there. All right, now the triggers are rolling at the zone. Small chart says odds favorable, momentum up. Weak side of the triggers. No reason to fight. We'll see what NASDAQ did. Still pushing down with strong triggers. I don't know. It's not there, huh? So let's do this. Let's go to the Nexgen Pro Trader funding. And let's go to the instructions. Joel, you were asking about this earlier. And I want to make sure that I've got everything right. So I'm going to go to Get Access, and I'm going to click on Pre-Made Workspaces. So I'm going to click on Crude Oil Futures because John Novak noticed something was wrong with my chart. I didn't even notice. And it's going to bring it up in a view-only mode. So what I can do is click Copy and save a copy of that crude oil. Once I do that, it'll bring it up in my browser version, but I don't really need that. I want to go back here and make this right. So I'm going to just go to my drop down and click on the crude oil copy that I just took from the website. And this is just kind of a little reset, a little rebuild. And it'll run through everything. And market flow should start printing. Oh, I've got an indicator error, which is next to T3 market flow. So I'm going to have to delete it. And I'm going to go to my indicators. I'm going to go to invite only, and I'm going to reload that market flow. And that should get us where we need to be. I do have a runtime indicator error over here. It's the T3 divergence potential. Anytime you see a runtime error on TradingView, just delete whatever the runtime error is, go to your invite only, and put your divergence potential back on. And if there was divergence somewhere, we should see it. And you can see that my market flow is starting to print. That's a good lesson on making sure your charts are right. Now we'll check the other charts and make sure that there's no runtime errors on any of those. There's one on my S&P. And it is for my market dynamics, which is where my zones come from. So I'm gonna lose that. I'm gonna go back to my invite only, and I'm gonna put my market dynamics back on. And it should run just fine. Good lesson, guys, on chart health. Crude oil, everything is smooth. Gold, oh, I've got it on gold. Which one is it? It's my chart prime over here. And guys, this is just a byproduct of a digital age. And now we're back up and we're smooth. Thank you for the heads up, John. Still weak side of the triggers, still odds favorable down. Guys, we're getting into trend trade zone here. If we're going to go up with the trend, if we're going to go up with the clear path, the rules for the high probability trend trade say no zones met on the 15. We're good. Pull back to the midband. And I need a close on the correct side of those small triggers. And that is a rules met scenario for a trend trade. I have 47 seconds until I know whether or not I get that close, guys. If you don't have the timer on your bars, click on settings, go to more settings, scales and lines, count down to bar close. And John says, both with pullback when both triggers down hard together. Yeah. So there's no, don't fight. The rules say a close on the correct side of the small triggers, right? That's the basic. That's learning the trend trade. We've got 4 seconds, 3 seconds, 2 seconds, and we're still not on the good side of the triggers. We're still in a pause. Miss Jen, weak top, odds favorable, waited for confirmation to take the medium probability trade, got out at trouble. When it pulled back with the potential, you added on, out at trouble. And then Jen, the last entry, oh, instead of closing, you sold 2 more. I've done that. Nice trading, Jen. Everything says down. You take a trade into the area and manage at trouble. And then potential to break, just another short trade. and then just a little drunk fingers. That happens though. Your execution is amazing. Your trade logic is amazing. Your read is amazing. Sometimes we push the wrong button, and it just made you give a little bit back. Monday brain fog. Oh, great. And now Hunter's going to be in here, and he's going to see you mess these trades up. And he's going to be like, oh, Mom, come on. Nice trade, Jen. Now we're starting to slow, but I've got 39 seconds, guys. See how the smalls are working back into the large? I'm weakening, but it's still not time to take a shot if you're going to take a shot. I've got 25 seconds. If I get a close on the correct side of my triggers, my smalls are starting to roll up. They're working inside of the large, and that's why we wait for the timer, ladies and gentlemen. Anticipating a close doesn't work. John Novak has more charts. And John says, weak side of the triggers, everything's screaming down. Did you sell the HVA, John? Nicely done. Guys, rules are meant to keep you safe. Rules are meant to help you understand when you have an advantage, when you don't have an advantage. And that timer, guys, that timer is absolute gold. HVA breakout. Right on. That timer is absolute gold for patience, guys. 9 seconds, 8 seconds, 7, 6, 5, 4, 3, 1. Rules met. If you enter long with a close on the correct side of the triggers, your stop goes below the pivot. We'll just put a profit target anywhere, right? You may just say, hey, let's see if it gets back up to these 1-to-1s. Does that make sense, guys? This is a rules-based trade. Pull back to the mid-band. Close on the correct side of the triggers. Large chart is strong and up. That's your entry for the high probability trend trade. Or not the high probability, that's just the trading view trend trade. Doesn't guarantee a winner, but it sure keeps you from getting run over 6 or 7 times, hoping the mid-band holds. So the 15-minute is on the weak side of the triggers, Jim. But do you see how I still have odds favorable momentum up? The overall is up. That's one of the reasons why you wait for things to slow down. Now the smalls are above the large. And again, this may not work, but it fits my rules. And I either have to get my stop hit or get my targets hit. Nothing's changed yet. My smalls are up. I'm above the large. I'd love to see it break above this zone. That would make me feel pretty good. But guys, all I can do is follow my plan, right? All I can do is trade the rules. If everything is up and nothing's in the way, mid-band is the next opportunity. But I don't just enter hoping a mid-band holds. I wait for a close on the correct side. And guys, an up bar here gives me a little reduction in risk. I'll go behind this pivot now because it's just another signal. What are we trading? We're trading 2 contracts. And we are conservatively looking for those 1-to-1s, right? So exciting. There you go, ladies and gentlemen. Bingo. That's just rules based. From 94 to 01. That was, I don't know, that's only 6.5 points each. That's only about a $250, $270 trade. So let's do the annotations. The 15-minute says strong up, and then I'll show my but weak side of triggers. Does that make sense? That's my large chart read. It is strong up, but I am on the weak side of the triggers. With 1 minute down, my trade needs a pullback to the midband and a close on the correct side of the small triggers. Rules met trend trade. Isn't that timer awesome, guys? And here's the cool thing. That results in a loser. That results in a loser. Loser, loser, rules met. There's your winner. Any questions about the trend trade? And because I saw the one-to-ones, I knew right where trouble was. What a great spot to get paid. You don't have to make $1,000 every trade. Make $250 4 times a day. It's a $1,000 day. $1,000 day is $250,000 a year. See how the slowdown happens? And that's when we have a fighting chance, guys. And it just kept getting better right until it hit trouble. Because I knew about trouble, guys, the one-to-one was 401.75. We took our exit at 401.50. Good job, everybody. Now if we get strong triggers up, the next trade, if you didn't hold your trend trade for the duration, would be a break and a pull back to these one-to-ones with odds favorable momentum. If it doesn't set up, then we just relax. Any questions? Let's go back to NinjaTrader. See what's happening over there, guys. Couple ticks short, no momentum, no areas inside. And sure enough, it pushes down. Whoa, that's a big picture. All right, real life holder break, guys. Strong triggers, 100%. What do we feel about those fibs? Actually, it doesn't matter what we feel about the fibs. What do our indicators say about these fibs? All right, is this Fibonacci area broken or have the potential? Only 2. What about this Fibonacci area, Jen? What about this Fibonacci area? That's a pretty huge range, right? Price broke through, right, Victor? What do your triggers say? Strong bottom or weak bottom? It's potential. Exactly, Chariot. It's potential. What kills the potential? That was a momentum trade. I've got a weak bottom here, Victor. I don't have any fibs down here. I've got all the momentum. 3 triggers through this one. I do have a fib update. You chili doggers, Russ is like, I'm already in and paid, right? It's the potential. I've got areas inside of triggers. I really just need a pullback, right? That was a momentum style trade. John, 5 ticks on runner. I like it. So John said, I like this. John took the exact same trade. He got it a little bit lower than we did. Target 1, but with the strong triggers, he says he's going to sit through it and see if this thing goes up a little higher. And you've got 5 ticks lost. So the worst case scenario, John Novak, is you make $100, right? But with the weak side, with the 1-to-1s, getting back below the triggers, great management, John. Giving it room to run, but not relying on hope. And John made the joke that he quit smoking hopium. When you see trouble, it's silly to give it all back. I hope that makes sense. All right. 2 triggers through this fib, 3 triggers through this fib. These are in the rear view mirror now. But we got a Fibonacci area right here. Sometimes it's not our money. Some of you jumped in with momentum and probably made a little money. Feel free to share your picture. And there we go. Fibonacci reached with all the momentum. We'll see how it reacts. Guys, what would you like to talk about? The live chart reads have done everything they've suggested so far, right? Momentum has pushed the market. Termination conditions have stopped the market. Weak triggers have created retracements from the middle of nowhere. When there's absolutely nothing in the way with all the momentum, you can find a way. Weak triggers, no areas inside, avoidable losses. Guys, you don't have to be in every move. Still says up. The zone's still holding. The smalls are above the large. It's just not my best look, is it? How my S&Pers doing? Pablo, you got ears on? Strong triggers, nothing in the way. Odds favorable momentum. Pulls back to the zone. Pulls back to the HVA. And look what it's doing. Did you see that one live? There's your mid band with everything up. That was your trend trade. That was your momentum trade after. Not catching it quite yet. That's okay. It takes a minute. It really does. And guys, it takes trust. It takes trust to just arbitrarily buy a market when it looks like it's going against you. That's where putting the two together really helps out. Couldn't get out of the zone. Weak side of the triggers. Small triggers are down. Guys, transition phase. Transition phase. John, they may be going for that fib that you saw earlier, right? The buyers tried to push up. We had the advantage, found a way to get paid. When it failed, we have to wait. They'll tell us what they want to do, guys. The buyers and sellers will tell you exactly what they want to have happen. You'll see it in your indicators. And if your indicators aren't making it clear, well, then it's probably not clear. That zone sure held, didn't it? Good look. All right, guys, I'm going to take 5 minutes. When I come back, it's tail end of the class. Let me know what you want to talk about. Let me know what you're studying. Let me know what you need help with. It doesn't matter if it's mechanics on TradingView, if it is chart reads. All you have to do is say, hey, Mark, let's talk about this. And I promise you, we'll talk about it. So I'll be back in 5 or so. work. Daniel, you want to talk about some entries on the 5-1? Absolutely. Let's do that. Now, Daniel, I've got to throw the disclaimer in there. I can only point out an entry where rules are met, if that makes sense. But I'll tell you what we'll do is we will go to crude oil. And we'll talk about what it means to have an entry. Are we talking about trend trades, Daniel? I just want to be sure. Cool. So I'm going to do this, and we're going to go through the language. Whoops, wrong one. And I'm going to make it a little prettier without a lot of fibs. So what I want you to see here, do you see where the circle is? So the circle is going to show up over here. But the language for entries, guys, we're going to just talk about the pattern that gets us to entry. And it all begins with momentum and at least the potential to break. At least the potential 2 triggers through. Your entry rules, Daniel. Whoops. What did I do? There it is. All right, so the entry rules are pretty specific on how to pinpoint. So guys, when your large chart, let's just do this. Let's make the large chart look perfect because all we're doing is we're talking about the entry pattern, guys. And language is going to pay dividends. So large chart has strong triggers. Large chart has a clear path. Does everybody see it? This is your best look. And I fudged my charts a little bit, guys. I got rid of my fibs and stuff. But that doesn't change the lesson for entry. So when the large chart is screaming down, when the rules are met, when life is good, on your smaller, faster chart, guys, we want to see a fight. We want to see, I like to call it, John Novak gave us this analogy forever ago, and I love it. When the large chart has decided they want it to go up and strong and nothing in the way, there's this small crowd. There's a small crowd that loves to fight, and they create this retracement. And the idea for entry is that we can pinpoint where their failure is most likely to happen, and that becomes the high probability trend trade entry. So when everything is screaming down here, typically it's screaming down on the smaller, faster chart too. Things are going down, they're going down fast, and you're afraid that you'll never get an entry. And then it goes down and it goes down, and the beginning of the process is waiting for a reversal bar. And this reversal bar signals the beginning of that fight, the beginning of that pullback. At the time of the reversal bar, you can pinpoint where the market, whoops, I didn't mean to take a picture. You can pinpoint where the retracement is most likely to occur from the bottom of the triggers to the top of the triggers, guys. This is your potential retracement zone. This is where those up bars may continue up. If you don't like a range that big, there's a way to bypass it, but it means being even more patient, guys. There's a look called favorable large triggers, which means that the large and the synthetic are overlapping like 2 snakes riding piggyback. This is going to decrease the zone where the retracement is most likely to happen. So triggers define the retracement. Guys, it's areas within the triggers that define the bounce point. And this is still a pretty good size zone from the lowest point of resistance to the highest point of resistance. And because triggers define retracement, because areas define bounce, stops go where the market shouldn't, which is about 4 or 5 ticks beyond those triggers. So it could bounce from 67, it could bounce from 70, it could bounce from 75, it could bounce from 82. But the great thing is you know exactly where your risk is, no matter which entry you take. And this is one of the ways understanding the language for the rules helps you out. The rules say get in at the lowest point of resistance when everything is perfect. This one really wasn't perfect because while all of these can create a bounce, with this look on the large chart, we don't want to stumble over a couple pennies hoping to make a few dollars. So you could put a limit order. Oh, the market's the other place. Right at the lowest point of resistance. It hits it, you're in the trade. Stop is where the market shouldn't go. Whoops. And guys, this one goes up to the mid band, and it's right in the middle of that zone. Let's go through it. You're in, and it goes to the next area. No signs of showing, but you're still in the good zone. Goes to the mid band, still no signs of slowing, but you're still in the zone. And then it starts down with all that momentum and a clear path. And because you can define where the market is most likely to retrace, because you can define where the market is most likely to bounce, you can make a good decision on entry, guys. And once you get a reversal bar in the direction of your trade, your stop gets reduced above that reversal bar. So there's kind of the basic entry rules. And now we can go back, Daniel, and we can, every time on the large chart you see momentum and path, circle a tail. This is how you study entries, because that tail is this pullback. So go back on your smaller, faster chart. Whoops. Sorry about that. And let's see where that tail ended up. So there it is. Reversal bar begins the pullback. The market will go somewhere, most likely, between the top of the triggers and the bottom of the triggers. And then check it out. Daniel, are you with me so far? There is one line inside of triggers most likely to create a bounce. Do you see it? Fibs, midbands, yellow, 1-to-1s. The market pulls down, hits it, stays in the retracement zone, heads up. New stop goes below that reversal bar. And even in the fluctuations on the market, stop keeps you in play. And ultimately the market goes up to Fibonacci resistance from the area inside of triggers. So this is a great way to study it. Every time you see momentum and path, circle a tail, and what you'll find is that the low point of that tail should be a rules-based entry. And we'll go back. Let's see if we can find one more tail. Here we go. Momentum and path. Scroll back. What's it look like? Mid-band inside of triggers. Right back to the mid-band inside of triggers. Whoops, I apologize for that. Never gets where the market shouldn't go and continues down with the momentum. So Daniel, that's going to be the easiest way to study with momentum. There's a reversal bar, areas inside of triggers. This one though, when you put your template back on, we're trading right at resistance. Let's load our 13.2 template back on. Oh, we're not. We have odds favorable. Oops, hold on. Guys, you have to click tick data to get your synthetics. And this will paint a very different picture. 3 triggers through, potential to break. Divergence is one of the biggest killers of the potential to break, and we'll see what happens. My plan, my personal rules say with divergence, I choose not to take this trade. Some of you may have a different approach. We'll come back and see what happens with that divergence on the potential to break. Miss Cindy, that's a weak top because it's not coming from a termination condition. This is definitely odds favorable momentum. Without a doubt, the potential to break. Beautiful pullback to an area inside of triggers. And sure enough, you get paid. Nice job. Nice job, Miss Cindy. There's the pattern once again. Steve Diego, odds favorable momentum. 3 triggers through. Clear trouble. Beautiful trade. From 70, oh, you take the momentum and then you add on. Really nice. Excuse me. Sorry, YouTube. No, so divergent, Cindy, thank you for saying that. Steve, great patience waiting for it to get above trouble. You don't have the fib on the large chart, but you recognize it on the small chart, and your patience is awesome. Good job. So Cindy, a strong top or bottom. Let's talk about divergence real quick. And let me go find a real world example of it for you. Here we go. So we'll go right here. So when divergence prints, excuse me, that was funny. When divergence prints, Cindy, you don't know about it until all the way up here. And the recipe for a strong top or bottom is a termination condition that reverses the market. So right here, it's just a loss of momentum, Cindy. When the market reaches it and the triggers don't break it, then you get a termination condition. So when you see that pivot happen, let me pull your chart back up. When you see that pivot happen, it's really just a loss of momentum. Now, when price comes back and reaches it and it becomes a termination, then it's good. Still a great look, right? All the momentum in the world, beautiful pullback to an area inside of triggers, and you're managing it a little more assertively down here because it's only the potential to break. It's still an outstanding trade. And that's just language, Cindy, is all it is. It's a good look. Hey, Miss Linda. Miss Linda, was that you asking me about getting the links to work in the spreadsheet? I don't know your last name, but somebody named Linda was asking about that over the weekend. I just want to make sure that you get your answers. I love this. Strong, strong triggers. I got you. You're above trouble, and you just jump in on your smaller, faster chart. Linda, that's a pretty easy trade, isn't it? All the momentum, above the trouble, beautiful. And here's one thing that makes it even better, Miss Linda, is you don't need these synthetics on a 13.2. You're running your NASDAQ template on there. So if you go to your 13.2 and right-click, go to your templates, and load up the Nexgen 13.2 Renko Dynamic because there's no need for synthetics on your large chart. Synthetics are used for entry over here, pullbacks to the areas inside of the triggers. So what you had was just the perfect chili dog trade that people call it. Odds favorable momentum, everything's above trouble, odds favorable momentum, get in, make $100, get the heck out. Linda, this is perfect. All right, let's talk about those links. So we'll do two things. First, we'll take a picture and grab a link. So we'll just do this one, termination that reverses the market. Guys, when you're posting in your spreadsheet, right-click, and you can paste that screencast app in there, and it won't let you click on it. From here, go to the Insert tab, and you're going to see the link, and you're going to click Hyperlink. Click Link, and you're going to insert the link, repaste, and let's just call this Strong Bottom. And now, Miss Linda, you should be able to click on it and open it up. When it's just the screencast link, It's like it's not settled in or something. But once you turn it into that hyperlink, you should be able to click on it. If you can't, click save and then give it a go, and you should be good to go. Whoops. Let's try it again. So I paste, I try to click on it. It just doesn't work. If I hold control, it just doesn't work. Let's see if I save it. Now I can click on it once I click save. So I hope that's helpful for you. And nice trade. All right, John. I like this. Everything says up, but the weak side, well, now you're on the strong side of down triggers, and that certainly pulls an advantage away. Oh, you've got this. I got no worries about you. And this is one of those decision-making times. So the large chart read is it still smalls above the large? The trend is still up. But now what I see, and this is for you TV people getting accustomed to the 15-minute bars, 15-minute small triggers are down. And price on the strong side of those down triggers, any longs need to be perfect on the 1 minute and managed assertively. Does that make sense? That's your read. It's an uptrend. Everything's going up. But your 15-minute is showing a little bit of change. Those small triggers turned. You're on the strong side of the small triggers. And let me show you exactly what that means. Strong triggers. John gets in right at the mid-band, right at strong triggers, right in the zone. He says this is the spot where if this market is still going up with this trend, that's exactly the spot. My smalls are above everything. And look at how small his risk is. This is John saying if it blows beneath that zone, man, it's just not mine. I know it's not perfect, but because of the overall look, I'm willing to give it one more shot. And John, I think that is the perfect shot to try to go with that trend that's been railing up. Those small triggers against, that was the fly in the ointment. But guys, when you understand what you're looking for, that was from 92 to 90. That was 2.5 points. That's unheard of in the NASDAQ. And that's how specific your entries can become. I like this trade. I think that trade is a good looking trade. Just didn't work, and sometimes they don't. They're still messing around, right? 3 triggers through, weak bottom. And Jen, you asked, do I consider the weak bottom, albeit miles away? I recognize it, Jen. A strong bottom really helps with this fib, and they've already broken it. And then a strong bottom still is impactful on this fib, and it's probably less strong on this fib. And all the way up here, Jen, I think the buyers have made their decision. Does that make sense? It doesn't change the fact that it's only 3 triggers through. It doesn't change the fact that divergence printed, that the smalls are rolling against it, right? And we'll see what happens. Yeah, 2.5 points is tolerable, without a doubt. And then it's just the same look. Smalls are still down, large are still up. Odds favorable momentum. He can see the trouble that's creating the bounce. There you go. We'll see what happens. But Jen, I think that these strong tops or bottoms are real impactful around the mid-band, real impactful. Here you're north of it, right? you've gotten through all the stuff that's really problematic from a weak bottom? Good question. Good question. With odds favorable momentum, buy the HVA. John, that is your bread and butter. Recognize trouble, get to break even. It either goes up or it goes down. John, great trade. Does everybody see it? Still an uptrend, but not the perfect look. So he forces the small chart to be perfect. Odds favorable, bottom of the zone, right at an HVA. 13 ticks is nothing. It either goes or it doesn't. It very much went. John gets paid at trouble, has absolutely nothing to lose. That ended quick with small triggers on the... Yep. But John, this is... And guys, I'm going to tell you right now, this is the difference. This is the difference between learning your plan and knowing your plan. You guys will be able to take the exact same trades. Within this range, back up to the small triggers, John had room to make money and protect his investment. He knew where trouble was, as evidenced by his target right at trouble. And then when it didn't work out, you were good. Great trade. Guys, the cool thing about chart reading is John's opinion had nothing to do with this. It was just a pattern. And now we're going to see what they do here, right? Can we get into that transition phase? Can we get above a little bit of trouble? We'll see. All right, Victor. Odds favorable, clear path, pull back to the mid-band inside of triggers, stop 2 ticks below the triggers, and everything railing up. Victor, did it fit your plan? Are you on NinjaTrader 7, Victor? Or NinjaTrader 8? We have very different fibs. Very different fibs. And I'm just curious, because my chart has a 5-1 fib right there. Oh, yours is MCL. Okay. I forget about that. You know, I don't know if I've ever mentioned it, but you could run the large crude oil and know where the people in control of the market have these fibs. But even with MCL, you could do it. Like, you could take this chart and make it MCL. Whoops, I need to make it 09 though. And then I could reload historical data to get it squared away. And Victor, this is pretty cool because you could be like, okay, this looks awesome on MCL. I'm going to execute for less risk. But it is the potential to break, and I do see multiple divergences. And maybe that gives you a little bit of advantage, do you think? By looking at the people with the higher volume, and let's just for grins, let's see. I'm going to do a market analyzer real quick. And guys, this is a part of NinjaTrader. You can load up your template. And there's only one, so it's hard to not pick the right one. And you can add, I'm going to do MCL 925, and I'm going to do CL 925. And Victor, who do you suppose is leading whom? Pretty cool, right? So potential to break, multiple divergences. See how that changes the picture of your long trade? And I know that you're just working on patterns right now, right? Victor, on MCL, your pattern is perfect. Your pattern is perfect. Your stop makes sense. Your advantages are amazing. And the second lower divergence took you out. that's it. I think you guys that are trading micros and not using the higher time frames, you're just not giving yourself all the information. It's kind of like, watch this. If I get rid of synthetics, it still looks like a pretty good, cool NinjaTrader chart, right? But because I don't have synthetics, I'm missing trouble. I'm missing things that could keep me out of trouble. So if you're trading the MCL or the MES or the micro NASDAQ, but you're relying on a micro contract to give you the best information. Oops, that was the wrong one. There we go, 925. But Victor, on MCL, your trade was perfect. Everything about it. Great pattern recognition. So regardless of the outcome, my friend, we know you can do it, right? And great patience today. It said support would likely hold, and it did, didn't it? All right, trading view. They did break up from the mid band. Back into trouble. Let's see what the S&P is doing. It's kind of the same look, isn't it? The small triggers are down. What am I missing over here? I'm not sure. Strong side of down triggers, 1-to-1s, and it's pushing down. If you decided to go long somewhere over here, those 1-to-1s were an awesome exit point for those of you on TradingView. Crude oil hit a zone, hit a mid band, came to the transition side, sell an HVA line, enjoy the ride down. We've got about 20 minutes left, guys. Is there something you'd like to talk about? Is there a topic you need a little help with? Is there a favorite song you'd like me to sing? Just kidding, seeing if you're listening. The path of least resistance for most of you guys is going to be having a checklist. Having a set of rules that you can follow that tells you when it's time to get into a trade. So for the high probability trend trade, here's my checklist on NinjaTrader. For the 50-50 one area not broken trade, here's my checklist for entry, NinjaTrader. For TradingView, trend trade rules, HVA trade rules, momentum trade rules. Oh, I'm sorry. Miss Linda, if you didn't get it before, you don't get it anymore. Just kidding. There you go. There's the KISS plan right there for you, Miss Linda. And guys, the KISS plan is more than a checklist. The KISS plan for you guys on NinjaTrader, let's review it. And let's go through it. So the KISS plan. And guys, it's the same on TradingView, but the KISS plan is designed to optimize your chances of success. Guys, the KISS plan doesn't include that just jumping in trade. The KISS plan doesn't include momentum trades, and it doesn't include HVA trades, counter trend trades. This is a stepping stone in your learning journey. And this is the trade, the high probability trend trade, and the best way to take it to optimize your chances of success. Because if you can find one market and one trade to build consistency, it doesn't get difficult to find the other trades. And it's going to be through simulation, study, class feedback, and continuous practice. Ultimately, you will write your own plan, guys, and it'll be based on your ability to read the indicators, recognizing advantages and making decisions based off of those advantages. There's two things you have to know before you sit down to trade and you're not on simulator, guys. You have to know why you will enter a trade. Because my rules are met, right? Why? Because my rules describe a pattern, and that pattern should have been proven by me through my study that it wins more than it loses, guys. That pattern, there's that tail, momentum, potential to break, no divergence to the area inside. I should have 100 pictures of this, and I should say without question, when these rules are met, this is a trade that typically wins 70 to 80% of the time. And when I say that, I'm also saying when these rules are met, this is a trade that typically loses 20 to 30% of the time. We all try to focus on the positive, right? Glass is half full, but the reality is I never know if it's going to win or lose. But what I do know is that I have an edge, that I have an advantage, that I have a pattern that I can prove gives me that edge. And the great thing is because I know that I don't know, it alleviates the anxiety. It pulls the emotion and the opinion out of trading. And if the rules are met, take the trade. And if they're not, if the edge is gone, I can sit on my hands and do nothing. Why will you exit a trade? This is what gets us, right, as brand new users. Because when you enter a trade, hope runs strong. I hope it doesn't stop me out. I hope it goes to my target. I hope I make $1,000, right? And why would I exit a trade, guys? Profit targets, getting out at Fibonacci areas is brilliant. You know where they are. You know they can stop the market. What a wonderful place to collect profits. But the other side of it is the advantages that get me in are no longer present. And this is why I want you guys to embrace the idea that if you speak about the advantages on your chart every time you take a trade, if you say, I have strong triggers, I have no termination conditions, I do have an area inside of favorable large triggers, you may choose to exit when one of these goes away. So define your entries, guys. Great entries make very manageable trades. And then as entries are very, very mechanical for the brand new users, management can be the same. Until you learn how to read your indicators fast enough to take exits, this is a way to go about it that gets you focused on two things. It gets you focused on stop placement, and it also teaches you to get paid, guys. And your initial stop is 4 to 5 ticks beyond the trigger lines because that's where the market shouldn't go. If I enter at the area inside of triggers, then my stop goes where the market should not, guys. And I don't know if it's going to hit it or not, but I know exactly where that's going to be before I ever take the trade. And the KISS plan, $100 and $200 targets, because remember, we're learning how to get paid. So your first stop movement, if the market gives me a reversal bar in the direction of my trade, my new where the market should not go spot is 2 ticks above. And it's not uncommon to see you guys getting into the market and having 3 or 4 ticks of risk on a trade because of that great entry. It still doesn't guarantee a winner. My stops are still at $100 and $200, but I have cut my risk from about $300 on the trade down to $60 because of the reversal bar. My first target's $100. If it reaches $100, ladies and gentlemen, one contract is pulled off, you go break even, you have nothing to lose, and you're learning to trust the large chart. I can't do worse than $100. My next target's only $100 in the distance, and I have odds favorable momentum and a clear path. And guys, if it makes it to that second target, that $200 target, it's a $300 trade, guys. And $300 each day in a trading year is a $75,000 year from only $300. And this is a great way to build confidence as you learn to read your indicators. So there's a little bit about the KISS plan. The 50-50, the potential to break 3 of the 4 triggers through from a strong top or bottom, momentum, no divergence. Says it right on there because this plan is designed to optimize your chances of success. Everything that I give you guys in the beginning is designed to optimize your chances of success. to give you the best of the best way. My goal and hope for all of you is that you create your own way when you learn to read your indicators. Divergence on a 50-50 trade, and they blew right through. You're welcome, Miss Linda. Did anybody take that loser wondering what went wrong? If you did, it's a great time to post it in the room, to tell me what you saw, to tell me what you were thinking, right? Jen, this week bottom may not have affected that, but those divergences certainly did, without a doubt. And if you go to the KISS plan, it says that you need a strong top or bottom. And it says that divergence kills the trade. So it makes sense that two divergences would kill it even deader, maybe. Weak triggers. And now we're getting down to Fibonacci support. Small triggers are down, but the large are still up at that reversal bar marker. Decision-making time. Decision-making time. Going down. And look at that, man. How do you find an advantage when large triggers are up and small triggers are down and small triggers are down and areas are up? Get back to the strong side of the triggers, guys. Get back above those small triggers. Give yourself a fighting chance. Look at how tight these bars are. That's 15-minute consolidation. These one-to-ones held one time, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. The one-to-ones have held. Are they gonna break for you because you're tired of waiting? Oh no, John Novak's typing. If you entered at the mid-band, you had room back to them, right? We'll see. You tried it, lost a few ticks, had to cover up when they didn't break. That's it. If they're really going to break, guys, price is going to get above them. Your triggers are going to be strong. Buy a pullback to it. There's a set of rules for that. But if I see something hold 12 times, I have to assume it's going to hold on the 13th time. I'm going to force it to break. But I can tell you that I took a lot of coaching from the other Novak about trading into areas that could stop the market. And the loving phrase, how many times are you going to do it expecting to win and ending up losing? They're trying. They're trying. How long will it take before you get sick of losing trading into areas? We're in the transition on the down. That's the point. Break or fail, right? It either goes or it doesn't. And it didn't. And John, I think this is the part of trading, and this is the part of study that people don't realize how, I'm not going to say easy or obvious, but you get this awareness, right? And you start to flow with the market because you know the things that are good and you know the things that are bad, and you just find a recipe to put yourself on the good side of things, because that's where the wins tend to happen. And sure enough, they held again. Son of a gun. Who could have predicted that? Uh-oh. Oh, where's the magic 8-ball? Will those one-to-ones break? This is what trading without a plan is like. Without having rules for entry, without having rules for exit, the outlook is not so good. Even the magic 8-ball knows that it's okay to respect areas. And then John says, absolutely. Now the triggers are lower, right? He can predict that it goes down, and he can see exactly where it's most likely to go down to. And sure enough, there's your mid-band. We'll see if it hits a zone. But guys, it's caught in a box. It's caught in a range. It's caught in a, I can't go down, I can't go up, right? Look at it. The zone held, the zone held, the zone held. The one-to-one's held, the one-to-one's held, the one-to-one's held. Is there anything wrong with saying they've got to break out of this location before I try something? What a great time to go eat a sandwich. What a great time to walk the dog. Go play with your new puppy. Fortunes are lost in ranges, guys, because we have this desire to be first. I'm going to be first, man. And when I get in at the bottom of that zone and it goes up, children are going to sing songs about me. Good stuff, Steve. Take care, man. Puppy's way more fun than this range. John, you should post a picture of that puppy in here is what you should do. Holy smokes. Freaking adorable. How'd we do today, guys? Did you learn anything? Andy V, great job on your chart read, posting those pictures. Keep those pictures coming for me. George T, how are we doing? I know you're still getting your bearings down on TradingView. I'm trying to lean on it a little bit for you guys that are doing it. Victor just killed it. Lenny G, good to see you. Z-Robot, how's things going? How's flying? Hopefully the world's treating you right. Ollie, great stuff on the NASDAQ. Guys, great lessons on having your fibs on a chart, right? You too, Victor. You guys know when you post in my room, we create this connection. I know what you're thinking. I know what you're looking at. I know what you're trying to do. And I'll help you every step of the way if you give me that opportunity. I will help you every step of the way. All you have to do is post a picture. All you have to do is ask a question. So it looks like we're done. So I'm going to go play day trader. We'll see if this breaks out of a range. If you have questions, guys, if you have needs, if you need tech help, get with Jason. If you are just stuck at 4 in the afternoon and you can't figure out momentum, send me a message. I'll help. One-to-one's held again. Great day today, Jen. Are you transitioning over to TradingView a little bit more? Slowly but surely? Now that you finally have NinjaTrader all figured out. Good stuff. Man, Lenny, I love being here. I love being here. I'm going to go figure out. I've got a 27th anniversary coming up on Friday. I got to figure out what to get my wife. So, I mean, she has me. What else does she need? But I figure we should do something. I'm going to go shopping. You guys take care. I will see you in the morning. Be good, everybody.